Hello everyone, welcome back to the discussion on chart patterns where we would be discussing one interesting type of chart formation on reversal patterns, which is commonly referred to as the double top or double bottom formation. As the name suggests, in case of a double top formation, your stock is going up, unable to sustain a particular level and facing a resistance there, coming down and retracing back, and again trying to go up but not able to cross that resistance. This is a typical double top formation, and the opposite is what is known as a double bottom formation, where stock is going down but unable to sustain below the support zone, retraces back and goes up, again comes down and touches back the support zone and goes up, indicating a double bottom formation. So let's look at one or two examples of a double top or double bottom chart formation, which are again parts of your reversal patterns. So as you can see on my screen, we have a chart formation here which is indicative of a double top formation, implying that the stock is in a visible uptrend and trying to go up, but at a certain level it is facing a resistance. It comes down to make a support, again tries to go up and faces resistance at almost the same level, and then it comes back down again. If you notice carefully, the EMAs which were initially acting as a support has now started acting as a resistance. So the rules being very similar to what we covered in the bullish reversal patterns, where the stock is in a visible uptrend, the EMAs are acting as a support and started to act as a resistance, and the stock has made a double top formation, as we can see in this chart. And for confirmation of your view, you can also make use of oscillators like RSI and MACD, where you can see that the RSI is giving you a visible negative divergence, implying that the sellers are taking control from the buyers and the momentum is weak. And also, if you notice the MACD, it has started giving you a bearish crossover and started venturing towards the negative territory. So this is another form of a bullish reversal pattern wherein the uptrend is taking a momentary pause and it may be followed by a momentary corrective phase. The opposite of a double top pattern is referred to as the double bottom pattern. So as you can see on my screen, the stock is in a visible downtrend. It comes down, takes a support and starts going up, and again comes down to take the support at the same level and again starts going up. If you carefully notice, the EMAs which were acting as a resistance have started to converge and they have started acting as a support, and the double bottom formation seems to be complete now. And if you notice the oscillators like RSI and MACD which I have plotted in this example, the RSI is giving you a visible positive divergence, implying that the buyers are now taking control back from the sellers, and the MACD is giving you a bullish crossover, although it is still in the negative territory. So these are all charts which I have plotted on a weekly time frame, and as I have suggested earlier, once you are able to spot these patterns on a weekly time frame or a higher time frame, you can switch back to the lower time frame to define your entry and exit points. A slight variation to the double top and double bottom formation is commonly referred to as the triple top or triple bottom formations. As the name suggests, a triple top meaning that the stock is trying to retrace back from the resistance zone 3 times. That means there are 3 peaks being formed. And if you use the techniques of EMAs on the chart, you can see that the EMAs which were initially acting as a support has now started to converge and start acting as a resistance, which means that this bull phase is temporarily over. There might be a pause followed by a visible downtrend in the stock price movement. So if you are a delivery trader and if you have a long position on this stock, it might be advisable that you might want to exit your long positions and retake your entry back at lower levels, and subsequently you reduce your cost of holding or your purchase price. So as you can see in this example, the Nifty Pharma Index has given a visible triple top formation where the EMAs were initially acting as a support, has started acting as a resistance after converging, and the stock or the indice went down in line with our expectations. Conversely, in case of a triple bottom formation, The stock is in a visible downtrend. It takes support at the support zone 3 times, forming 3 different peaks on the downside and hence referred to as a triple bottom formation. And as you can see on my screen, we have the chart of HCL Technologies here, where the stock made triple bottoms as indicated by the black dotted lines. The EMAs, which were acting as a resistance, have started acting as a support after converging, and probably this is one area where aggressive traders can take the entry and they can add in favor once the resistance is cleared. The visible downtrend in the stock is now complete after the pattern formation, and the stock has started to go up in line with our expectations. So folks, I hope that these reversal patterns that we have covered in this video and the previous videos are of use to you and have given you the necessary insights that are required to take very informed trading decisions. As I mentioned earlier, technical analysis or chart patterns are not an absolute science. Chart patterns can fail and chart patterns do take time to develop. So don't rush into taking a trade just because you are seeing a pattern formation in process. You should wait for the pattern to be complete, and you can also use other intuitive tools like the candle, which is giving you the breakout. For example, here you have very big and large body candles, which is indicative of the fact that there is a breakout that is visible in the stock. For being successful in trading chart patterns, you need to develop your knack and you need to find your edge. You need to identify which are the tools or which are the indicators that you would want to use to identify and trade chart patterns. You should never rush into taking a trade, and always remember, chart patterns when developed and formed on a higher time frame holds more significance as compared to chart patterns on a lower time frame, because higher time frame charts are extremely difficult to be manipulated by the market participants, whereas a lower time frame chart like an hourly chart or even a 2-hour chart, these are subject to manipulations by big players in the market. So higher time frame charts hold more significance and hold more weightage when it comes to technical analysis, and chart patterns is one part or one domain of technical analysis. Always remember that. So folks, a few points before we wrap up the video on reversal patterns. Patterns do take time to develop, and never rush into taking a trade. And the more you practice, the more would be your success in the stock market journey. Thank you and good luck.